Today, in the Owner Suite, I'm joined by Josh Luber, founder of StockX, on what it was like to grow his company to a $1 billion valuation and then step aside to work on some really interesting trading card projects in the future.
You've been invited to the Owner Suite, where we get down to business with the movers and shakers in trading cards, NFTs, rare collectibles, and other alternative assets. Click the subscribe button so you can keep coming back. Now welcome Jeff Wilson, the sports card investor.
Hello, and welcome to the Owner Suite. Today in the suite, we're joined by Josh Luber, the founder of StockX, who grew that company from just an idea to a valuation of more than $1 billion. And we're going to find out what it was like growing the company, lessons learned along the way, as well as advice he would have for entrepreneurs who are trying to launch new products today. Josh also has some really interesting parallels between the growth of the sneaker market and where the sports card market is today and maybe in the future. But perhaps the most interesting part of the story is Josh recently stepped away from StockX and is now working on new ventures in the trading card space. We're going to hear all about it in just a moment. Before we welcome Josh in, I'd like to remind you that the Owner Suite is brought to you by my growth agency, 352.
At 352, Jeff and his team work with growth stage and enterprise companies to drive new revenue. They're experts at bringing your business to new customers and markets, building and launching digital products, and pioneering new ventures. Learn what they can do to grow your business by visiting growwith352.com. That's growwith352.com. 352. Let's do what's next.
Josh, welcome to the Owner Suite.
Thanks for having me.
For sure. And this is going to be a great conversation because we're going to span from starting a huge company in the collectible world with sneakers onto moving it into trading cards and now everything you're doing beyond StockX. So there's a lot to dig into today. But I'd love to start with just a little more about your background. I know part of that involved coming through here in Atlanta at Emory, but where did you actually grow up originally?
Yeah, I mean, I grew up in Philadelphia, but I went down to Emory for undergrad in 1995, and I thought I was never going to leave. I was there for 15 years. Went to grad school there. I was at JD MBA, but I also started my first couple startups in Atlanta. And like I said, I thought I was going to be there my entire life, and it wasn't until one of my startups essentially imploded and then had to look for a job that I ended up leaving in 2010.
And you went to, I think you got a law degree at Emory, right?
I did. I was undergrad and then a JD MBA. So I have
right. JD MBA. So Juris Doctor. So you got both the law degree and the MBA. That's wild.
Emory has a lot of money from my family, and I met my wife in law school, so we got another degree there. My brother also was an undergraduate, and so we got 6 degrees between my family. So we get a brick there or something like that.
I am sure the Emory development office is probably dialing your phone daily, asking for your support of their fine, esteemed college without that much money already invested. That's funny. Yeah, and I know obviously we have some connections, similar connections here in the Atlanta startup world, and you were a player in this scene for some time, but then as you said, you kind of shifted gears. What got the idea of what became StockX kind of going for you in the beginning?
Well, the irony is that I intentionally avoided trying to create any businesses in sneakers almost my entire life because I was such a personal collector and it was such a personal passion that I almost kind of avoided trying to go down that path, almost out of fear of creating a business that was an excuse to play with sneakers. In 2010, I moved from Atlanta to New York. I took a job with IBM. I was a strategy consultant with IBM. I never thought in a million years I'd go work for a company like IBM. But if you're a startup guy and you go work at one of the biggest companies in the world, the first thing you do is you start working on stuff on the side. And that is a perfect opportunity to start merging your personal passions with your skill set. Because look, if you're busting your butt, 40, 50, 60, 70 hours a week in your day job, you want to do something that you really love nights and weekends. And so I started to almost intentionally try to find a business in sneakers while I was there. And at IBM as a consultant, I was deep into data work, like any other consultant, kind of getting thrown in the deep end and trying to learn a lot about data work. And so for me, the side project at IBM was, can we create a price guide for sneakers? Which, there's obviously a lot of irony here, talking to you, one of the leading price guides for the trading card industry. But we used to say back then that we were like the Beckett for sneakers. And this is back in 2012 when this stuff didn't exist and there was no one doing real analytics in the sneaker and streetwear world. But that's what it was. It was a side project that was like the Beckett for, or the SEI for sneakers back in 2012. And that was the first business.
Yeah. And you were of course early in that sneaker popularity boom. Sneakers exploded before trading cards. And I think there's a lot of similarities, but there's also a lot that the trading card audience can probably learn from learning about, how sneakers exploded. So when you first started doing that, it was a side project. Did you think to yourself, this could really turn into something big and become a huge company? Or was it simply more of kind of almost a passion, hobby type thing you were doing?
I mean, never in a million years did we think it would become what StockX has become. And, I think one of the pretty clear things in pattern recognition of startups over time is that no one goes from 0 to 100 overnight. No one says, hey, like I have this idea and I think tomorrow it can be a multi-billion idea. Like that's a pretty naive way to look at it. We knew there was a real need for this product in the market. I knew, as being, someone that was deep in the sneaker space, that this was a product that made sense. But no, I mean, not in a million years did we think it would be this. It ended up being a very, very logical progression, one foot in front of the other, of creating a price guide, having a price guide, being able to create what we were calling sneaker portfolios. The idea that you could look at someone's sneaker collection the same way you look at a stock portfolio. Frankly, a pretty easy and obvious application of value. And frankly, the most obvious kind of one step to the next, which is, we understand the value of one pair of shoes. We could look at someone's whole sneaker collection. And that is kind of what spurred the idea to go down this idea of a stock market for sneakers. So it was a very progressive idea process to get to what would ultimately become, StockX at this point is, $5-6 billion company.
And that's a very common startup story. Like people who, aren't involved with startups think that there's some magic where the founder has some epiphany and then, the next day starts building this $1 billion company. But the reality is, as you described, that it's a lot of evolution and it's a lot of humble beginnings that over time you find your way into more opportunity. And then you start, the vision builds over time rather than it being necessarily this lightning strike right at the beginning. One line that I always like to say is I'm an overnight success, or my company's an overnight success, 10 years in the making, right? Because that's every major startup story you hear with a giant, price tag or the giant acquisition or investment round. Oftentimes there were many, many years of humble beginnings there before that thing got to that level.
By the way, that's almost it's almost an anomaly to find a successful startup that doesn't have that of the overnight success, 10 years in making. That's exactly the best way to describe it.
Yeah, for sure. And so, to anyone out there looking to launch a new product or found a company, patience and understanding it's going to be a journey, and understanding that whatever your idea is at the beginning is needs to evolve. It's healthy for it to evolve and grow, and then hopefully it will grow into something great. At what point in your journey, Josh, did you say, okay, I think I'm really onto something here?
So we launched StockX in February of 2016, and we were super fortunate that we get to sell the most highly coveted products in the world. We don't have to convince anyone to buy Jordans and Yeezys, Supreme, Rolex, Louis Vuitton. This is truly the most highly coveted products in the world. So our goal, our mission was, can we create a more efficient way for people to buy and sell these products? The concept of building a marketplace, building an evolution of eBay, premised on how the stock market works. We knew that the market would become more efficient the more liquidity there was. And this is the same for any marketplace. And it's certainly the same for stock markets. So we launched in February. In September of 2016, It was the first big Air Jordan release following since we had launched. There'd been some small releases, and we had very, very step function, gone from one sale a day to 2 to 3 to 4. We were doing about 50 to 60 sales a day. And then there was a big release. It was the Air Jordan 1 Bread, which is the black and red original colorway of the Jordan 1. And that was Nike putting a lot of supply all into the market at the same time. And that day we did 301 sales. And today StockX does 30, 40,000 sales a day, right? So we're nowhere near this is an IPO-able billion-dollar company, but the model was working. We were seeing that as more liquidity hit the market as a whole, the spreads were shrinking, bids and asks were coming off the board. And we were like, oh, okay, our thesis on the model is working. And that was the moment that we said, okay, there's definitely a business here. We still had no illusions that it was going to be as big as it is, but we knew at that moment that the model was going to work because it was premised on liquidity, and it was premised on being more efficient the more liquidity there was in the system.
Yeah, I imagine with that, you sitting in a giant shoe room right now where you've got a lot of your personal collection, would be safe to assume that you probably have a pair of those particular Air Jordans somewhere in your room.
I do. They're over there. I would grab them if they were slightly more on camera, but absolutely, I have a pair of those, and I have many pairs of Jordan 1, as that's one of the kind of OG shoes.
Yeah, for sure. So that's a cool story. So I imagine that day you were probably pretty excited to say, you were doing like what you did, like 5 or 6x or more of what you do in a typical day on this one release day.
Yeah, there was an app that we had on our phone that has all the stats from the company in real time, and I mean we were like refreshing our phone every 4 seconds all day, watching, because from the like 10 a.m. from the moment the shoes dropped, we were trending ahead of where we'd ever been. I mean, it was by far the most exciting day, even maybe in the history of the company, and it just so happened because a lot of sneaker big releases usually happen on a Saturday. That Saturday night, I was out to dinner with my wife and kids and Greg Schwartz, who is our co-founder and COO. And so I kind of got to spend that moment with us and our families as, we're at dinner and we're like this the whole time, refreshing our phones, and our wives are like, what are you guys doing? Like anyone else. But it was such a seminal moment in the history of that. And after dinner, we went out. There was a park, like a kids playground, like across the street. We took all of our kids over there. And there's this picture that one of our wives snapped. Greg and I are each pushing our daughter on the swing, and we're each like this with phone in one hand, pushing on the other. I didn't even know that picture was taken, but it solidified that moment in time. And it was just extraordinary to go back and think about how excited we were to be doing 300 sales that day. We're now literally we're doing, 30, 40,000 a day.
That's one of the funnest things about doing a startup is when you hit those milestone moments along the way. You just get this thrill of, we've experienced that at, Sports Card Investor along the way where the day we launched Market Movers, and we didn't know if we were going to get 5 people to sign up or if, however many, but then we quickly got 100, and then we quickly got 200 and 500 and then 1,000. And it was, just the thrill of hitting those milestones. It's almost more fun. Those moments in the journey are almost more fun than the, eventual outcome of, oh, we're a big company now and, we're doing all this stuff.
I couldn't agree more. I mean, that dovetails into a lot of, why I left StockX and what I'm doing now, because it's a blessing to be able to be part of a leadership team that's running a multi-billion-dollar company that is likely going to go public later. But man, it is way more fun. It is way more exciting. I mean, we have 9 people at my company right now, right? It was awesome. We hired our 9th person. That was way bigger deal than getting whatever it is, the next tranche of $100 million funding or whatever it is. It's just different. It's just different.
Yeah, it definitely is. So that day you did, over 300 sales. How long did it take you from that point to get to where you were doing serious volume, 5 or 10,000, sales maybe in a day?
Yeah. The next major moment is, so that's September of 16. Holidays 2017 is when the business really blew up. From Black Friday through the end of the year, the business grew about 5x in 5 weeks. And that was the complete change on everything. That was, okay, this company now is on a trajectory to be what it is today. We recognized very quickly that the holiday season, like any other consumer good, was going to be really important for us. But holidays of 2016, we didn't have enough of a base to have as big of a jump. But man, holiday of 2017, like I said, 5X in 5 weeks, it was all hands on deck. It was absolutely insane because not unlike some of the problems that PSA is having right now and the reason that PSA shut their doors, at StockX, we were physically authenticating every single product. So every product that was sold is sent by the seller to us. We authenticate the product and send it to the buyer. Well, that process, just like PSA can't go hire a grader off the street and put them in there the next day, we can't go hire a sneaker authenticator off the street. There's a training process, it takes time. You can't put someone unqualified in that role. So man, at one point UPS had 15,000 shoes they couldn't deliver to us because they couldn't even get it in the door. They had to take it back to the UPS facility. It was absolutely insane. And that was the next, okay, this is going to be, or has a potential to be what it's become.
Yeah. Well, that's really neat. And what was your team makeup like then? How did that change over time? Like maybe from that moment you shared in 2016 to that moment in 2017 when your sales really took off, what was your employee makeup like?
What the biggest evolution was in the structure and process around authentication. When we launched in September of 2016, when that happened, and even when right before the big growth in holiday of 2017, we had one authentication team in Detroit in our building, and we very quickly realized that was not at all tenable for scale. I left StockX in September, so I've lost track of all the stats, but I think we're up to either 10 or 11 authentication centers around the world. They just opened one in Australia last week. There's one in Hong Kong, in Japan, in London, obviously a whole bunch in the US, including New York, Atlanta, Portland, Detroit, Arizona. So that process of scaling the authentication team and process so that you can, one, get products to people faster, reduce everyone's transaction costs, because if I can keep products, in country, you have less shipping costs, you have less customs duties costs. It became a very complicated process, but one that, as we saw, made the business much more efficient, was a much better experience for the customers. And it goes back to having a really amazing team creating that authentication process across the board. The core business doesn't look too much different than other businesses. You don't need that many more people to scale digital marketing, to scale brand, but it is the authentication process that will continue to grow lockstep with the business forever. As long as it grows, we're going to have to keep creating more.
Yeah, that growth model is cool. I wonder if it's something the grading companies will begin to adopt. You mentioned PSA. They're trying to do all of that grading, out of one central, office out in California. A regional approach might make sense for them and might make sense for more companies now in the sports card world.
Yeah, I don't know if how much of this is just sort of what people used to talk about or how true it was, but they used to have an authentication center in the New Jersey, New York area. And I think what used to happen is there would be differences in variants, like what's a New Jersey 10 versus a California 10, right? So I think if they can get the consistency of grading across the board, then absolutely, you have to go that route. If there's a variance in consistency of grading, then that creates a pretty big issue and arbitrage across the industry that I'm sure card collectors would exploit as much as they can.
Yeah, no, that's a fair point. That's a fair point. But maybe as they layer in more artificial intelligence into the grading process, which is something obviously they're working on, maybe that's where the opportunity presents itself a little more to be able to open up local centers. I mean, I shared a vision of grading in the future on my show. It probably goes back a year ago, where I talked about how I thought artificial intelligence was going to, specifically computer vision was certainly going to, automate the whole thing. And I said, wouldn't it be awesome to get to the point where you could walk in your local card shop with a stack of 50 raw cards, and an hour later you could return to your local card shop and they're all graded and slabbed, because the local, essentially they've got a machine kind of like the, 1 hour photo processing machines that are in every CVS and Walgreens, right? And you could, it runs through a machine and it checks out the card and uses all these cameras to determine a grade. And then the slabbing is part of this conveyor belt process inside this machine. Maybe that's a little far out there, with what's achievable right now. But like that idea of making it just faster and more accessible is really what's going to change the industry over time.
Look, I think your vision there is dead on. Like, I think that happens. I mean, it's TBD of how quickly it happens, and obviously PSA will have to be the one to bring it to that point. And this goes to why they bought Genamint, which is, and I don't know if you've met Kevin, who runs Genamint, yep. But really, really smart guy. I like him a lot, and I think that your vision there is dead on. I think we see that at some point, not too distant future.
Yeah. Well, we're starting to talk about trading cards, and I want to talk about that a little more, but I'm curious in the context of StockX.
Stop like two card guys from like talking.
I know. We're gonna talk cards. It's gonna happen. In the context of StockX, when I talked to you, it's probably about, let's see, at the National 2 years ago. So at the 2019 National, StockX was there, and that was kind of the beginning of StockX saying, we want to get into the trading card world, right? And then I don't even know if you've officially publicly announced StockX was getting into the trading card world at that National, or if that was it was still a little underground. But I know that was your moment where you were there starting to scout it out and lay all the pieces together. What was that opportunity you saw?
Yeah. We hadn't even launched cards on the site when we were there, but the National is when the National is. And I made it a point. I said, listen, we just need to be there, less about StockX brand, even though we did have a booth because why not? But for just to bring the team that would be working on cards so everyone could see the National, so that we could meet with as many people as we could. In retrospect, I'm very lucky that because of StockX, I was always just looking for what other products might make sense to put on the site. And so I got tuned back into cards towards the end of 2018. And that's when we saw eBay cards were moving very fast on eBay. We decided to start working on it for StockX. We eventually then added trading cards to StockX. And because of that, for both my personal collection and also sort of where I'm at right now on my entrepreneurial journey, having left StockX to create businesses in cards. Again, I'm lucky that I was just kind of a little bit ahead of the curve, but it was very, very clear in November of 18, in the summer of 2019, that what would happen was going to happen, and that where we're going to go. The thing I think is really, you appreciate this more than anyone, is, I talk to reporters all the time and I read all these stories, and so much gets attributed to the pandemic that, trading cards blew up because of this was going to happen this year anyway, right? Like, this is like, did it help a little bit? Maybe, but like, this is going to happen this year anyway. And every smart person that I spoke to, even not smart people that I spoke to at the National in 2019, everybody saw what was happening. Everybody saw our generation coming back into the hobby, the growth in demand and in people coming back into it. And you noted earlier the similarities to sneakers. That's exactly what happened in sneakers in 2013, 2014, which was just people. More people coming back into the hobby against a fixed supply. That causes prices to rise. That causes demand to go up. And that's what we saw then. That's what happened. And I don't think any of us are surprised. But we were just one of many who saw exactly what was going to happen.
Yeah, I agree with you. The pandemic gets too much credit for the growth of trading cards. I can tell you, we launched Market Movers in February of 2020, so right before the pandemic struck. But I was, hyper watching the market data day after day. And March of 2020, actually late February and early March of 2020, the trading card industry was literally day after day, prices were pushing up so much every single day. And if you go back and look at the graphs, if you look in Market Movers, you go look at the graphs from March of 2020, before the pandemic struck, it was straight up and to the right. I mean, we were going through a massive spike period, and then all of a sudden the pandemic hit, and the market did freeze for a little while. Card prices did come back down for a couple of weeks. and then they took back off again. But everyone says, well, they took off because of the pandemic. They were taking off every bit as much in the couple of weeks before the pandemic. Maybe the pandemic helped a little bit, with people being home and there being no sports, and, maybe it attracted a little more attention from daily fantasy sports players or sports gamblers who weren't able to do that anymore. But cards were on their way to becoming as popular as they are today, pandemic or no pandemic. And that's, by the way, there's a lot of people now that are saying, well, now that the pandemic is ending, cards are going to go back down in popularity and value again. And they're pointing to some of the recent performance the last couple of months as evidence of that. I completely disagree, because as I said, I don't think the pandemic actually contributed that much to the growth of cards. And frankly, the people who point to like the last couple of months of the sports card market being a little soft are just completely ignoring the fact that we had record-breaking months in December and January and February, which pushed it so high that a little bit of a correction was probably in order. And that's, what we're going through at the moment.
And if you go back and look at the last 2 years, and you literally have the data, we see this every single time. Right. We saw the dip that happened in September, August, September, after the massive run up through July of last year. We saw it's the same thing. It goes like this, comes down a little bit, comes back like that. That's what happens, right? Prices skyrocket. People have low cost bases. They're going to sell. It brings cards back down a little bit more. So it's completely normal. I agree with you 1,000%. And it would have been interesting to see what would have happened for cards if not for the pandemic. But we wouldn't have had that massive stop in March, right? For those 3 weeks, like the market just froze, right? It was volume more than anything that just cut off because no one knew what to do. No one wanted to sell. Man, I wish I'd put all my money in back then, right? In March of 2020.
So I'm curious, since you have the longevity in the sneaker world, and you look back at the sneaker world back to like 2012, 2013, how could you apply that knowledge of the sneaker world over to cards? Like, sneakers obviously had this big boom period year after year. I suspect the growth had to start slowing down at some point, but how did that pattern look, and what insight might that give us into what trading cards could potentially do maybe over the next few years?
Yeah, it's a great question, because I've obviously been asking myself this every day since we got into this in 2018. What was really clear in the sneaker market, and 2013, 2014, you had all these people coming in. Now, Nike and Adidas can make more shoes. This isn't like trading cards where we have a fixed supply of 2003 LeBron James, rookies. So Nike and Adidas make more shoes. Supply goes up. Prices stay the same because retail prices need to stay the same. But the secondary market grows in volume. That's really what happened here. In trading cards, where obviously the prices are growing. So in sneakers, it was units. In trading cards, it's dollars. So the same thing that's happening. But at some point, the rate of growth of new people into the hobby has to slow down. Otherwise, at some point, literally every person in the world is a part of the hobby or a part of the industry. In sneakers, we got to kind of the end of middle of 2016, and that really came to like a crashing halt. And prices in sneakers and the secondary market sales were going like this from 2013 through mid 2016. Sneaker manufacturing is 12 to 18 months out. So Nike and Adidas are making their decisions on what products to make, how many to make, etc. And so 2017, every Air Jordan was sitting on the shelves. Foot Locker, all these stores have to put Jordans on sale. I mean, this hadn't happened in decades. The Air Jordans, first of all, wouldn't sell out right away, wouldn't have a resale premium, and would actually end up being on sale. So you had this like screeching halt of, oh my God, like the resale market's dead. Jordans are bricks, like nobody's buying them. But it was a very clear sign that, the rate of growth of people had sort of gotten to an equilibrium. And so, the number of units has to slow down as well. So if I know that was a little bit jumbled, but if you follow that, the corollary is trading card prices have been going like crazy for 2 years now. At some point, the number of people coming to the hobby will slow down, will come to an equilibrium, and prices will also even out. I think prices are actually a little bit ahead of people. So I think that, maybe we always like to talk about like what inning we're in. I think prices are in like the 7th, maybe even 8th inning, but people are still only in like the 3rd or 4th inning. So at some point, the number of new people coming into the trading card hobby will slow down, and the prices will also then slow down. So I don't know. Did I explain that right? But does that?
Yeah, it's helpful, and I'm curious. So you went through this with sneakers in 2017. What have the last few years in sneakers been like? How has that transpired since that point that you hit?
That's right. So then the market corrects itself. In the case of sneakers, Nike and Adidas start pulling back the number of new products they're putting out there. The resale market starts to pivot and find those products that are more scarce that people want. And from a market as a whole, it's continued to grow extraordinarily. And it just kind of looked like this. It was like going up really fast, and then it steady as supply and demand were coming back into equilibrium, and then coming out of equilibrium. Like that's what you're really looking for, which is demand far exceeding supply. And then it continued to go back up. So I think what happens in cards is that as new people come in, prices keep going up, high. Same pattern that we've been talking about. You go up, have a small dip, go up, have a small dip. And then at some point, it just gets to a more steady state. Maybe cards are only moving up, 5-10% a year instead of 300% a year, the way it's at. So think about like the way that prices moved, for the last 20 years up until 2015, right? Which is that, yeah, cards are worth more the next year, the following year, but you just didn't have this exponential growth. And in the sneaker industry, the resale price of sneakers has been almost constant across the board. There's a couple outliers, but for the most part, $150 pair of Jordans is going to resell for somewhere between, $200 to $300. And that's what it is. And so we're at equilibrium in sneakers. In trading cards, the equilibrium would be about the rate of growth of trading card prices.
Yeah, that's really interesting stuff. And I think a interesting parallel with your story there and what is happening in sports cards today is I think some people would suggest that the amount of product that is being printed this year by Panini and Topps is a lot more than it was last year. And last year was a lot more than it was the year before. Maybe we're entering that, 2017 in the sneaker world period where there's a little too much being created at this point, and you might have a little bit of a cooling down. We're already seeing it in the fact that, a lot of the modern cards have been not as hot in the recent months, and part of that may just be the supply is getting greater and greater of the modern cards in the marketplace. And by modern, I mean really ultra modern, the cards from the last couple of years. However, one of the really nice things about cards is we've got the long history, and a lot of the players who are the most collectible are cards like you mentioned LeBron. Well, his rookie card was 2003, or Kobe, whose rookie card was 1996, or even Mike Trout, whose rookie card was 2011. Those they're not making more 2011 Topps update cards, right? So you can pick and choose where you want to place your investments. You had mentioned in sneakers that the market corrected and people started going after more scarce cards as opposed to the heavily produced stuff, or more scarce sneakers, in the world of sneakers. And that may correlate well with a lot of what we've seen in the trading card market over the last 6 months, where a lot of the heat has been around, the iconic players and the iconic cards that are lower population stuff rather than, the brand new 2021 releases.
No, that's exactly right. And the best example of this is, well, certainly the focus on the iconic and the older cards, but look at 2019 Prism with Zion. When that product came out, they were selling for about $4,500 a case. And by the end of the year, they were $25,000 a case. 2020 Prism comes out. To your point, they've clearly made a lot more. Came out the gate at $2,000 a box. It's still $2,000 a box. I'm going to guess by this time next year, it'll be $2,000 a box. You might have a little bit of fluctuation, but that's okay. Like having a product that goes up 500% in a year, that's the hyper growth about people coming in that we didn't have it. Now we should be at a steady state where, hey, look, the product is sold for what we think it's worth because there's enough people in the market on day one when that product's released to make it sell for what it's worth. the only reason it should go up in value is either way more people come into the market, which again, that's starting to slow down, or something drastic changes with the players in the set. But we already have our point of view on LaMelo and Anthony Edwards and James Wiseman. Like, yeah, sure, these guys will get a little better or a little worse, but like we already have our point of view on these guys vis-a-vis how they compare to LeBron and Durant and all-time greats. And we're just not going to know about that. By the way, that's my latest, I don't know, truth I've sort of come to, that everything around modern cards is partly about pop report, but it's really just, do people believe this person can be an all-time great, and how likely do they think that's going to happen? Because otherwise there's no way to explain the fact that Zion cards are in the exact same price they've been a year ago, and he's had an unbelievable year, right? So.
Yeah, I agree. But of course, there's also more supply that continues to get added into the Zion market, which makes it a little harder for those cards to escalate. Cards that, cards from, if you do see a lot more movement, even if you go back a few years ago and you look at like Devin Booker and how his cards have accelerated, over the course of the last several months, for example, or even Donovan Mitchell, because those cards are just naturally so much more scarce. But when you get a Zion, there's so many cards out there that people really have to be desiring, snatching all of those up in order to keep that market pushing up. But I agree with you. His play has been unbelievable. And I do think that there is some savvy investment plays with Zion, but you can't go for the Prism base card as much anymore because the population count's going to be so high. You got to go for some of the more rare stuff.
Yeah. But I on the personal side, I grabbed a couple big Zions in the last couple of months just for that exact reason.
Yeah. 100%. All right. So I want to wrap up the StockX story. So you had this great run with StockX, but obviously you made the decision not too long ago to leave StockX and pursue some other things. How did you make that decision to leave StockX? And then let's talk about what you're up to now.
Yeah. So I replaced myself as CEO in the summer of 2019. We did our big sort of unicorn round. We brought in a more professional CEO to help us scale. It gave me the freedom to work on all the startup within a startup stuff, really focus on trading cards. And over that next year, it took a year to come to the realization that just because I started the company doesn't mean I need to stay there. And once I had that mini epiphany, it was like this. It was like the sort of world parting, because there was so much I wanted to do in trading cards and there was so much opportunity there. And for better or for worse, StockX had gotten so big that it didn't make sense for StockX to go after some of these things that I wanted to do. When I left, we were selling a couple hundred cards a day, where we were selling tens of thousands of sneakers a day. And that's okay. And that's why small companies can, outmaneuver large companies in some of these areas. So for me, it was just so much opportunity in the trading card space, so much similarities to sneakers. And most importantly, I think trading cards are a more perfect product for the vision that I originally had for StockX, which is this ecosystem that's a perfect balance between commerce and finance. And sneakers and trading cards have a ton in common, but the one major difference is that trading cards are true investable assets and sneakers are not. Sneakers are still just rubber and leather and glue, and they are not long-term investments. People make money buying and selling them, but they're not good long-term investments. So for all that reason, I left in September. I've created several businesses. The one that is kind of most public is we created a trading card alternative asset management company where we create funds and a pretty dead simple business where we raise money, we buy cards, almost like a Vanguard mutual fund. And that's a pretty straightforward business. And then we're working on some other stuff that hopefully we'll get to launch and talk about soon. But it's all around this idea that trading cards are this perfect intersection of commerce and finance. Yeah,
really cool. Well, I know some of your projects I think are a little in stealth mode. I'm sure we're going to hear about them in the future, but the fund's very compelling. And so is that something? I know when you deal with funds, you deal with some are only for accredited investors and some you can't maybe talk about or advertise. I mean, give us a little more to the extent that you can.
For sure. And that's right. There are different rules around marketing. funds and that business. So I've been buying a lot of cards myself, obviously. And at some point, you just physically can't buy any more cards. A lot of friends were, and goes back to the similarities of sneakers. In 2013, 2014, I'd get 5 to 10 emails a week that said, "Hey man, can you help me find those Jordans we used to wear in high school?" And now it was, "Hey man, can you help me find Jordan rookies?" Right? Same people, right? And as I was buying cards, as people knew that I was buying cards, I get a lot of people that said, "Hey man, can you help me buy cards? Can I give you 10 grand? Can I give you 20 grand? Can you help me buy a mini collection?" And I was doing that for some friends because they were friends. And then those conversations started to turn to, "Hey, can I give you 30 grand to buy a collection? But, I don't really want to hold it and deal with selling it. Like, could you hold it and then like sell it for me later?" And I was like, no. Well, actually, hold on. I was like, there's a pretty clear business there.
Yeah.
And for the moment that we were back in the hobby, dating back to the National in 2019, everyone said some version of like, well, of course there should be funds for trading cards. Of course, cards are investable assets. And, we used to say all the time that, one day, Vanguard will have a trading card fund or Vanguard will have a trading card desk. And they were like, hold on, why don't we just create that? And so it was a friend of mine who is a fund guy who had been sort of pitching me on the idea for years. And I was like, let's do it. Let's put it together. And so we have kind of two fund guys that run the business day to day. Today, it's called Six Forks Kids Club, which is totally just a name. I always wanted to name a company. Has nothing to do with anything. But the idea is that we could have multiple financial products. So think about any financial product that any financial services company could offer. As you could do that with trading cards and continually as more money comes into the hobby. So today, we have one sort of core fund that is where most of the investors end up in. But there's a lot on the table in terms of thinking through is like, do we create alternate funds that focus on niches? Is there a soccer only fund? Is there a Pokemon fund? And then you get into things like, indices and derivatives and everything that goes there. So, that's kind of how we're thinking about a lot of that stuff. But there's no website for it. It's not like Vanguard where anyone can go invest. Like the fund that we operate right now is an accredited investor fund that we in fact can't even actually market. And that's okay. And that's the way that works, but it's all built on, in particular, my like true belief that we're still early in the value of these assets long-term and that it's a good place to put money. I have a lot of my money there. I know you do as well. And so that's the idea of the business. Yeah.
Cool. Very, very cool. We'll certainly be interested to track the growth of that and where that goes in the future and continue to root you on. Very, very neat.
And by the way, and we often, reference your data as we continue to, because eventually I assume you or maybe some of your peers or maybe you guys will get together and do it. We will have real-time market data on every card in the hobby. It'll be like the stock market where at any given time, and that will be phenomenal for our business, right? We don't want to go and recreate that because we have people like you working on that part of the hobby. But man, like how cool it would be when our investors can get a real-time snapshot of the change in value of their investment in the portfolio. So we're watching other things you guys put out at Market Mover.
I appreciate it. And we are working very, very hard to make it the complete snapshot of all cards. We, even in the last, since the beginning of this year, we've expanded the database from about, I think around 10,000 cards at the beginning of the year, maybe 15,000 to today it's well over 30,000. And we want to get it up to 100,000 before this year is over and hopefully even quicker than that. So our rate of growth of our database is expanding tremendously. And the whole premise behind it is exactly as you said, to have a real understanding of the value of every card that's out there. So that's the direction we're going for sure. Very cool. I'm curious to get your take on NFTs and if you've done any investing in that space, if you see them as an investable long-term asset the same way you see trading cards.
Well, let's note that NFTs and trading cards are two completely different things. And obviously NBA Top Shot and the commercial success has really blurred the line between the two of them. I have bought 0 Top Shot. I do not intend to buy any Top Shot. The only NFTs that I own are I own some CryptoPunks, which is one of the very first NFTs. And actually today or this week, Gary Vee is releasing his NFT project.
Yep.
And what I think is most interesting about that is Gary's NFTs as a collectible are in fact the last part of value in the value equation there. And that's what I think is interesting, right? And not to, it just happens to be that this is happening this week, but I think NFTs that create value in other ways beyond just being a collectible asset is the interesting part of NFTs and how we can use them within business. Can we get to a point where, PWCC and Alt and these guys are trying to create vaulting businesses? Well, let me buy and sell that product without ever taking possession of it because it's tied to an NFT, right? Not because you're necessarily holding the product and trusting it, right? Let me take that NFT that is being vaulted by somebody, but trade it anywhere in the world, not just on PWCC's site or on Alt's site, right? It's on the blockchain. It's not necessarily, just in PWCC's vault. Stuff like that is fascinating. And then again, the way that Gary's doing this, creating a residual value of a collectible. If you do that and it happens to be valuable, great, it's gravy. But I'm not investing any of my money in NFTs solely as a digital collectible. I just don't think that there's real value there certainly not compared to trading cards.
Yeah, interesting stuff. Awesome. Well, before we get you out of here, I know there's probably some people in the audience who are aspiring to start the next StockX, whatever industry that might be in for them. I'm curious, for someone who's trying to launch something new in trading cards and sneakers and NFTs, what advice would you give somebody who's trying to launch something new into one of these spaces?
Yeah, I'm very fortunate, and that I get asked that question a fair amount in a number of different ways. And I always say that the same two things, and they seem super basic, but I believe in this wholeheartedly. Number one, talk to everybody about everything. A lot of people, particularly young entrepreneurs, are scared of people stealing their idea, or will show up to a meeting with an NDA. Like, ideas are worthless. Execution is the only thing that matters. And the only way you're going to refine that idea, the way you're going to find business partners, investors, employees, is to talk to people about it. So that's the first thing, is talk to everybody about everything. Second is, and this is even more cliche, is just do something. And I hesitate to say just do it sitting in a room of Nike shoes, but just do something, right? Whatever that one step is to get to the next step, we never in a million years could have thought that we'd create, a multi-billion-dollar business when I was, nights and weekends sitting in the middle of Excel spreadsheets and writing queries to clean eBay data. But what was I going to do? Was I going to put that down and go watch TV? No, we had to do something to move forward. At that point, all I was trying to do was get some clean data, and then maybe I could build a price guide, and then maybe we could build portfolios, and maybe it was just do something of whatever that is to move yourself forward, to put yourself in a position to have whatever happens next, and then to bring it all the way back to what you said, to have the opportunity to one day have an overnight success that's actually 10 years in the making, because you've been doing this stuff, behind the scenes.
Yeah, that is awesome advice. And I 100% completely agree with you on both of those pieces of advice. I hope there are some up and coming entrepreneurs out there listening who listen to Josh's advice, because I think you were right on with both of those things. That's awesome, man. Hey, Josh, thanks so much for sharing all of this with us. It's been great to have you here in the Owner Suite.
Oh, thank you very much for having me. Good luck with the Owner Suite.
Appreciate it.
Thanks for joining us in the Owner Suite. Please click subscribe if you enjoyed the conversation, and leave a review to help spread the word. Follow Jeff on Twitter and Instagram at Jeff352. And check out Jeff's growth agency, 352, at growwith352.com. See you next time in the Owner Suite.